Welcome to Kitco News and our special coverage of the Mines and Money Online Connect Mining Conference. So gold prices have hit all-time highs above $2,000 an ounce, and this is helping to push money back into the mining sector. We're seeing mining companies across the spectrum be able to raise capital. But what does this mean for the streaming industry? This industry has been the lifeline of the mining sector for years now. Are there still deals to be made? Joining me to talk about the health of the royalty and streaming industry is Randy Smallwood, CEO of Wheaton Precious Metals. Randy, it's been a while since we've talked. It's really nice to have you on the show today.
Niels, it's always a pleasure to chat with you, so looking forward to it. Thank you for having me.
So, there's tons of excitement in the mining sector. You know, we're seeing companies are actually able to raise money, they're able to do stuff, but I'm sort of wondering, what does this mean for the streamers? I mean, you guys were the lifelines for a lot of companies, for the last 6 years. Are there still deals to be made for streamers?
Well, look, streaming is going to be a part in the mining industry forever. It's there's so many benefits to the operators, there's so many benefits to the shareholders, etc. The big benefit is of course it takes a good project and makes it a great project. It takes a good mine and makes it a great mine. The dramatic increase in the internal rate of return, or the return on invested capital in a project, if you use a stream as part of the financing, always makes a project so much more attractive to an operator's shareholders. And so streaming is always going to play a role. It's definitely become, pardon the pun, mainstream as a source of financing. And any mining company that needs to source capital will consider streaming as a source of that capital. Now, commodity prices climb. Obviously, projects get a little bit more expensive to invest into because expectations about the value of that metal in those projects do climb with those commodity prices. There's times to make deals and there's times not to. What we look for, of course, is opportunities where we can deliver value and consistently accretive value back to our shareholders. So we do have to be sensitive in terms of watching commodity prices. We do believe that we've just seen the start of the precious metals bull pricing cycle here right now. We really do think that there's some good upside in precious metal prices on a go-forward basis, and so we're still very active out there looking for ways to deliver value. One of the aspects that people forget about the streaming side is that most of our clients, most of our partners are actually base metal operations. Base metal prices are doing a bit better, but we're still not anywhere near highs there. And when they see the record high prices on the precious metal side, especially the gold space, there's a lot of consideration about whether they should crystallize some of that non-core byproduct value when those copper miners are interested in selling off some of their gold production to a streaming company. And so we are seeing still some good, strong interest on the streaming side.
I think one of the things that we've talked about over the years is Wheaton's pipeline, and you've actually said this. You've made the analogy of streaming as sort of like agriculture. There's a time to cultivate, a time to sow, and a time to harvest. Are you confident in your pipeline? Is this now the time to harvest?
Well, I'm hopeful that we can still get a couple of development deals. So you're right. The cycle that we see is development, harvest, and then repair. I hate to say it. So maybe as a good word, and then we go back into the development side. And so we only came off the repair side, the balance sheet repair side, probably 2016, 2017. We haven't seen a lot on that side. So there's still a lot more development that needs to be funded in this industry. We haven't seen a lot of redevelopment invested in, and so I think that demand is going to be there and be strong. And I'm hopeful that we've still got a few more years of funding project development in the mining industry before we get to a harvest phase.
Well, and let's look at prices. Obviously, you said there's more upside potential. So what do you think? I mean, we saw sort of prices hit that resistance at $2,000 an ounce, and not necessarily give a price forecast, but I mean, do you think gold is fair value at 2,000, or is fair value probably higher than that?
Well, I always like to reiterate the fact that we are measuring it in U.S. dollars, and so I always have to qualify anything here by saying in reality what we're talking about is where do you see the U.S. dollar going? Where do you see the fiat currencies of the world going over the near term? And when you look at the pandemic and the impacts, the economic impacts, which have yet to be fully realized, have yet to be anywhere near fully realized, The changes that we're seeing here, the dramatic impacts on the economy, are just going to require continued, for lack of a better phrase, helicopter money, economic support. And so when it comes to precious metals, they will represent a solid store of value through a very, very challenging time over the next few years. So I believe what we've seen gold climb up over 2,000 and then pull back a little bit. This is only just building a new foundation. This is building a new basement for precious metals, new basement for gold. We're starting to see silver has nicely kicked up and finally started moving, but everything here feels like we're just building up firmer foundations for a continued strong move up. Really, the most of that coming from the fact that we just see continued pressure on those fiat currencies and what kind of real value those things will represent over a period of time. We know it's going to be decreasing in value, so that will just come back in strength with gold and silver.
So as much as you like gold, you've actually loved silver. So I gotta ask you about the silver price. We have seen it actually now start to outperform gold. And I'm sort of wondering, we saw gold hit all-time highs earlier this month. Do you think silver will hit all-time highs? I mean, silver is always interesting because it's that precious metal play versus industrial demand. So, I mean, do you think silver has what it takes to, go back to $50 an ounce?
Well, Niels, I'm going to correct you. It's not a versus, it's an and. It's precious metals play and industrial demand. And the combination of the two is what makes silver so attractive. You've got this core industrial demand for silver that is growing. It's in high technology applications. It's in antibacterial applications. It's in areas that the world is focused on. Higher efficiency, less power wastage. Silver conducts electricity better than any other noble metal in the world, better than gold, better than copper. And so silver will play a role. It has stronger antibacterial properties. And so there's just all sorts of benefits to silver. We've been saying for a long time the fundamentals are much stronger, but silver always lags gold. When gold starts moving, silver stays flat for a while and starts moving. And I've been saying that now for well over a couple of years. We're finally starting to see that realized. In the last 3 months, last 2 months, we've really seen silver totally outperform and claw its way back up. Now, we're not to record highs yet, but with the fundamentals behind silver and along, around that whole backdrop, I'm confident that we will see record highs in silver over the near term.
And finally, copper. You talk about base metals. Copper, everybody's sort of kind of excited at $3. Is there more upside for copper then? And do you see, and is that where you want to make your deals in sort of these base metals?
Well, and just to make sure, just to clarify, we're doing precious metal deals with the base metal miners. We're not doing copper streams. We are a pure precious metals company. We are only gold. We are only silver. We're palladium, and we've got a bit of cobalt coming in starting in January. But we're not doing copper deals. What we are is doing byproduct gold and byproduct silver from these copper mines. So we do study the copper market, probably more so than we do the gold market, because that's our biggest opportunity set, is buying this non-core precious metals byproduct from the copper mines and the lead zinc mines and the nickel mines. And so, obviously, economic stimulus, copper is a very, very industrial driven metal, and demand is one of the key things. And I hate to say it, when you sit and look at the hard, real economic data from around the world, even with a slight rebound in terms of some demand from this pandemic, we are still nowhere near where we were a year ago in terms of overall demand. And I'm not convinced that we're going to see that total increase in consumption to try and make that up. I really do think there's been a step back in consumption. That being said, having copper up over $3 also reflects the fact that there hasn't been a lot of exploration investment in the base metal sector for a long time. For a very long time, we haven't seen any real significant big base metal projects coming on stream, especially in the lead zinc space. And eventually that catches up. Eventually we see supply side pressure. And, I think some of that is coming from when you look at the copper industry and the copper mines around the world, the grades are getting lower and lower and lower. We're having a tougher and tougher time sourcing that copper. And I do think that that's going to continue to provide some support. So I'm bullish on base metals, but fortunately, I still think we're going to see a lot of opportunities to acquire precious metal streams from those base metal operations.
And let's look at Wheaton Precious Metals. You guys released your Q2 results. Congratulations, record profits. And I guess the question I wanted to ask is, free cash flow, free operating cash flow, more than $150 million. What do you do with that? I mean, obviously you say, there's deals, you're still looking for deals to make, and you have a dividend, you actually increased your dividend. Are there ways to give back to investors as well? Like, with all this cash, what are your plans with it?
Well, my first priority, of course, is always to try and find ways to put it back into the ground and continue to grow our reserve and our resource base, because that is our foundation. That is what we are as a company, is the assets that we've invested into. And delivering that for a long period of time with high margins and long life assets is really what differentiates Wheaton as an investment side. So that's my primary focus, is always to look for accretive opportunities to reinvest the dollars back into the ground. Now, we do have a dividend. It's a unique dividend. It's actually tied to our cash flows. And so 30% of our cash flow goes back to our shareholders, averaged over the previous 4 quarters, just to smoothen out some of the volatility. But as we see commodity prices climb, our cash flows climb. And if our dividend is a function of our cash flows, obviously our dividends will also climb. So we will see upward pressure, definitely on a per share basis. But as our company grows, our next 5 years, we should average over 750 or around 750,000 gold equivalent ounces over the next 5 years. So we've got some good substantive organic growth within our existing portfolio. It's getting tougher and tougher to put that money back into the ground. And so we're just going to, if we can't do that, then we'll continue to push it back towards our shareholders, the dividend. So the 30% of cash flow that we use as a reference for our current dividend will climb to 40%. It will climb to 50% as we continue to grow our company. If it's not going back into the ground, it's going to go back to shareholders.
What about something like buybacks? I mean, is that something you would consider with, as you sort of look at where this money goes?
I hope not. I mean, I hate to say it, but my preference is to get the consistency of a good, strong dividend package. And what I would rather see is, my vision for Wheaton Precious Metals is that we ultimately get our company up over 1 million gold equivalent ounces per year of production. And I think at that stage, we can start seriously thinking about shifting more towards a yield-focused company and getting up to the point of putting 50 to 60 to 70% of our cash flows back to our shareholders. And treat it that way versus a buyback, which is kind of a one-off event and just doesn't. I don't think it's as beneficial as the dividend is.
It's not that long term. It's not that long-term value play.
Well, you could argue that, once you buy back, those shares are taken off the register. And so there is a long-term benefit in the sense that your share count is less. And so you're sharing it amongst less shares. But I still see the same benefits from a dividend, a good, healthy dividend program. And so I've just seen there's plenty of examples of investment trusts where the shift focus is to delivering yield back to the shareholders. And I have no problem in seeing our company getting to that format sometime in the future.
Well, actually, that was going to be my last question too. Is you saw record growth in the second quarter. Is this a trend that you see continuing? And it sounds like the answer to that is unequivocally yes.
Yeah, no, we've our portfolio of assets is amongst the strongest, if not the strongest, from a quality perspective and from a life perspective, a reserve life perspective, in the precious metals industry. We really put a lot of focus on making sure that we invest into first quartile and second quartile assets. So the bulk of our production comes from the bottom half of the respective cost curve. The huge advantage there, of course, is not only will these assets continue to operate through high and low price regimes, it's also the first place that our partners reinvest back into. And we're seeing all sorts of evidence of that in terms of our partners growing these assets and building them and expanding. We've got Salobo with a 50% increase in throughput capacity scheduled in 2022, 2023. We've got Hudbay at the Constancia operation, getting the Pampacancha zone up and running. We've got continued improvements at Peñasquito with Newmont. San Dimas opening up new zones, new areas, First Majestic at San Dimas. The Stillwater operation, typically underutilized milling facilities there that there's a real strong push to try and expand that. So we just continue to see continued reinvestment on our partner side to try and make these assets better, and of course we reap the benefits of that. So we've got good, strong organic growth over the next 5 years, all sorts of opportunities to add a few more, and it's looking very positive over the next while.
Randy, that was fantastic. Again, congratulations on your strong Q2. Thank you very much for joining us today.
Niels, always a pleasure. Great to see you.
Thank you for watching Kitco News. For the latest in the precious metals markets, go to kitco.com. Stay safe and stay healthy.